Hello, everyone. Good day, good morning, or good afternoon, depending on where you're at in the world. This is Jason Ulrich with Top Shelf Traders. Thank you very much for joining us. We've got a really good-sized group here with us today, and we've still got folks, since it's just 1 minute after the noon hour on the East Coast, we've got folks still filtering into the room. Before we get any further, let's do a quick sound and visual check. We've got the questions box open. If you could just let me know that you can hear my voice okay and that you can see the screen okay. Just put a yes in there. That would be great. We'll use the questions box as our way of tracking questions and then also keeping an eye on comments. So we'll use that throughout this session today. The screen you're looking at, that's Jonathan Rose's screen. We're thrilled to have him with us today. I'll give a quick overview on today's session and just a little bit about Jonathan. So the title for our today's session is Swinging for the Fences, How to Find and Trade Inexpensive Options. We recently completed a survey of our members and readers across the Top Shelf universe, and options, as you probably imagine, is a really big topic. And affordable options is something that we know people are really looking forward to. So today's topic is very timely. Jonathan's going to cover a variety of things, but as noted there in the overview, how to find options that are priced less than 50 cents, how to risk small and position yourself for the gains you're looking for, and then how to start out, especially if you're a beginner. Now, if you've heard Jonathan's name before, it's probably for good reason. He's been around for quite some time. And so when we had the chance to have him join us, we jumped at that opportunity. He's the founder of ActiveDayTrader.com. He's been trading since 1997, and he is going to be presenting to us here today. Now, I was giving him a bad time. He actually he's run 4 marathons in the last 4 years. And Jonathan, despite what I said before, I really am not going to embellish any more than that. 4 marathons in 4 years is way more than I could ever do. But I'll go ahead and turn it over to you here in just a second. Please keep in mind that this is, of course, being recorded, so we will send that out. We had a few advanced requests for that, and it will also be posted to the Top Shelf YouTube page. Yes, we usually send out the recording the same day or the following day, Carl, so keep an eye out for that as well. We like to keep these sessions very informal and very interactive, so as Jonathan is working through his presentation and sharing his comments, please don't hesitate to put a question in the questions box. We'll go ahead and keep an eye on that, answer all the questions that we can possibly get to here in the hour that we have, and then any other ones, any other questions that come up, we'll be sure to follow up with that. And we'll include, of course, Jonathan's information. Jonathan, you're already being put on the spot. What times do you run the marathons? When have you run those marathons? This is getting hardcore awfully quick here. Okay.
Right. Hey guys, this is Jonathan. Carl, I'm just trying to finish in one piece. If I could have lunch after with my family, that's a good day.
Cool. Go ahead. Go ahead. Take it away, Jonathan. For the record, I could never run a marathon. So if I'm running anywhere, something has gone horribly wrong for me. So.
All right, guys. Well, excited to be here, Jason. Thank you. Thanks very much for the intro. Carl, are you a runner? Running is running is my therapy. My wife always tells me that she likes me a lot more when I'm running, so I take her advice. Nice. Eric ran up the stairs today. All right, well, let's get into it. So, guys, this is my flagship product. Swing for the Fences. It's exactly how I learned how to trade options. It's exactly how I teach options trading. I think it's a really just practical strategy for everyone. So I'll get into everything. I'll explain how it works. As Jason said, we'll keep the questions up. Very casual. You have any questions, we'll stop, answer questions, make sure everything's covered. So let me just first start basic risk disclaimer, and then we'll get into the fun stuff. Trading or investing carries a high level of risk and is not suitable for all persons. Before deciding to trade or invest, you should carefully consider investment objectives, level of experience, and ability to tolerate risk. So as we know, guys, these are educational presentations. Whenever I talk about specific trades or levels, it's not a trade recommendation to anyone. It's just where I see value in the market. So that's me with the arrow coming out of my head back in late 90s, early 2000s on the floor of the Chicago Mercantile Exchange. It's when I was trading NASDAQ futures. I got into the business. First 5 years, traded NASDAQ futures, then I traded bond futures, and then in 2011, I was a market maker on the Chicago Board Options Exchange. What we're going to go through today, it's the foundation of exactly how I trade, exactly how I teach options. And I've broken this process down. It's been proven to help others. Many have called it a complete paradigm shift. So I'm not asking you to believe anything just yet, but I am asking you just to keep an open mind because it works, but I'm going to make the assumption that it's very different than how you approach the markets. So here's what I'll show you. I'm going to show you how to find and how to buy low-priced options, putting ourselves in position for awesome returns without the need to stare at the market all day, without the need to worry about our positions. I am a big fan of the hunt. I want to do my research. I want to have reasons for being in every trade, and then once we're in the trade, our work's done. The market's going to do what the market's going to do. So it's not something that you have to sit there and stare at the market all day. So just to go over real quick, to be clear, if an option's trading for 30 cents and you buy an option for 30 cents, if you buy 10 of those, you're risking $300. You can never lose more than $300. You can buy a one lot for $30 and never lose more than $30. Okay? That's the great thing about buying little options. You know exactly what you're risking every time. Now, just to jump in, here's Steven. Steven was skeptical before meeting me. He had big goals and he had no confidence in his process. Before me, he had been trading options for 3 years. And now 16 months after working together, Steven's a full-time stay-at-home dad and his approach to the market completely changed. And he's really confident in his overall process. What he likes to do, he can spend time with his little boy. He doesn't feel the need to stare at the market all day. He's not holding out to losers and covering those winners real quick. What he's done, though, he's really learned how to manage money. And by doing that, he's able to take consistent money out of the market. So again, congrats on just being open to learning. This isn't a trick. This isn't something you can use once. Jason and I were talking. This isn't an indicator that has a green line that shows up and tells you, okay, it's time to buy, and that red arrow that, okay, it's time to sell. What we're doing is learning, okay? In my opinion, the only way to be successful in trading is through real education, okay? Let me just ask kind of the room to get a feel, you know, from 1 to 5, 5 being super comfortable, expert, 1 being, I don't really know what options are. Where would you put yourself on the scale of 1 to 5 as far as just your comfort level with options? You know, 5, I'm really, really comfortable. I trade them all the time. I understand how to value them. And 1 would be, I don't know what a call is. I don't know what a put is. You know, where would you say you guys are at? And it'll really help me just as I go through the training portion to see, you know, kind of where everyone's going. Okay, lots of 2s and 3s. Okay, cool. Okay, so I would say 2s and 3s have an understanding of what calls and puts are, but maybe haven't found an approach that you're confident in. Is that fair? Many think options are confusing, but like anything, if taught wrong, of course they're confusing. What we want to do is simplify them, because it's not what I know. It's about helping you be in the strongest position to succeed and meet your goals. So let me go over why I'm qualified to teach you about options, because if I was in your shoes, that's what I'd be thinking. Been trading for 18 years, not marketing, not sales, just pure trading. But where I really learned options was when I was a market maker on the floor of the Chicago Board Options Exchange. What you need to do to be a market maker is you need to have the ability to value options to the penny. And if you can't value options to the penny, you shouldn't be a market maker. You're going to get absolutely run over. So I was a market maker for 4 years. I've trained over 100 professional traders in options and futures. As a market maker, I was concurrently trading 100 different names and thousands of different strikes. Also a portfolio manager for a family office in Chicago. And then I like to do endurance sports, marathons, and I did the Ironman in Wisconsin. I share my background only just so you can see that I'm an expert in this area. I'm not a marketing guru. I trade for a living, and I work with a small group of clients. So edge. Edge is what makes us different. Every trade you make, you need to think about why. What's the reason for being in that trade? So think about what you're doing in the market. What gives you that special edge versus someone else? What's the reason that you did your last trade? So today I'm going to show you a trade that has real edge, but I'll also explain why the trade has edge, because that's what I really want you to understand. And for those who don't really understand options well, it won't matter because it's exactly how I always teach. So let's get started. Buying options, right? We could sell options, we could buy options. Most are taught to sell options. Do some of you guys only sell options, or have you been taught only to sell options? For me, I look at it as you can risk $5 to make $1, or you could risk $1 to make $5. When you're selling options, you're risking $5 to make $1. When you're buying options, you're risking $1 to make $5. And even if those had the same exact outcome over a year after doing 100 trades, I'd still rather risk $1 to make $5 because it's just a much better way of life. Whenever you buy options, when you buy calls, when you buy puts, when you buy straddles or strangles or debit spreads, you're long volatility. You're long movement. You want craziness. Whenever you sell options, you want things to be quiet. You want things to go to sleep. You don't want any movement at all. You just want to collect your premium. So here's an example. We're going to use a phony baloney stock, ABC. This is the biggest difference that many see when they start working with me on options trading. And it's about position management. In my opinion, position management is so darn important, but many trade options without even understanding what's available to them as far as managing their trade. So here's an example. Again, phony baloney stock, ABC. Starting here, it's trading for $10. All of us together, let's buy the 12 strike calls for 40 cents. If we do that, it's $400. We can never lose more than $400. We could buy a one lot for $40. We can never lose more than 40. So even if ABC stock turns out to be Enron and goes to zero, we lose our principal. That's it. Never lose more. As the underlying stock rallies, it goes from 10 to 11 to 13 to 14. Let's say it's at 14 right now, and there's 10 days to expiration. Doesn't really matter. And if we have 10 of the 12 strike calls, what can we do if we want to take off half the position or half the risk? What are some things that we could do? Okay? Long the 12 strike calls, the stock's trading at 14, we want to take off half our risk. We want to lock in half our risk. What can we do? Sell, sure. Carl's saying we can sell some of our options. If we're long 10 of them, we could sell half, sure. Then we'd be long 5. What else can we do? There's really 3 things that we can do to manage our options position. As Carl says, we're long 10, we could sell 5. Okay, fine. Not a bad thing. What else can we do? Is that all we can do to manage this position? How can we protect ourselves? We have these paper profits we're sitting on. We want to lock it in. I'm not getting those guesses, guys. You could buy a put, fine, but when we buy a put, we're buying volatility. We would only want to buy a put if we want to get long volatility. Buying a put is not going to lock in this profit. Buying a put is actually going to add a little bit of risk. So that wouldn't be something, Eric. What you could do, stocks at 14, we're long the 12 strike calls. We could roll it into a spread. We could sell the 14 calls or 15 calls. That's something we can do. What I teach my clients and what I think is really valuable, and many retail traders just don't have a firm grasp on or don't even realize that you can do this. What about if I sell stock? What if I'm long 10 of the 12 strike calls and I decide to sell 500 shares of ABC? Can we do that? You can do that. That's really what you're going to want to do. Because if you just sell 5 of your calls, you're giving away the most valuable thing that you have. And what that is your optionality. So Carl, here's a great example. If you're long 10 of these calls and you sell 5 of them when it's at 14, fine, you only have 5 left. You locked in profit. But watch what happens if you sell 500 shares. If you sell 500 shares, it's the same thing as selling 5 of your options. But with 10 days to go until expiration, let's say ABC stock is Enron and turns out to come out with accounting problems and the stock goes all the way down to 4. Well, if you're long 12 of the calls, if you're long 10 of the calls and you sold 5, you locked in money on 5 and your other 5 are worthless, right? If you're long 10 of these calls and you sold 500 shares, ABC stock goes down to 4, let's say, you just made 10 points on 500 shares, $5,000, and your 10 calls are now worthless. See the difference? That's keeping your optionality. What that's called is scalping gamma. The biggest breakthrough I see in any of my clients is learning how to properly manage your options position using the underlying stock. Cool stuff, right? So my goal for this presentation, guys, is I want you to understand why these specific trades make sense, but I also want you to understand that others have committed to this process and are no longer searching for the best approach to options or the right way to trade options. They understand that education is the only path to success, so that's really what I want you to come away from. What do we got here? Just another testimonial. So here's a kind of trade that we look for in swinging for the fences. Is the market getting killed right now? Sorry, guys, I just want to see the market too. Yeah, it is. So these are the kind of trades that we look for in swinging for the fences. YRCW. YRCW is a very, very volatile stock. But YRCW, the options are still very tight. And when I mean they're very tight, it means they might be 20 cents at 30 cents. They're not 20-cent bid at 50 cents. So back here in October, YRCW came out with earnings. It dropped 50%. After that, I was on the conference call, and I realized, hey, it's not as bad as everybody is saying. So I put out a trade recommendation. I'm buying the 9 calls and the 10 calls with 18 days until expiration. So that's going to be right here. And you can see the real kind of ferocious move YRCW made after the earnings release. As I shared that trade, members were able to buy the 9 calls and the 10 calls. The 10 calls they were buying for 15 cents. If you buy 10 of those, it's $150. You can never risk more than $150. And you can see Mark made 2,200% on a trade like that. Thomas makes 800%, Mark 2,200%, and Kelly 600%. Mark actually bought the 10 strike calls 100 times for 9 cents. That's $900 of risk. All of a sudden, when YRCW gets above that 9 strike, those 100 calls is the same as being long 10,000 shares of stock. Here's another thing that I see from my clients. They'll tell me they've spent so much money on trading education and now have nothing to show for it. Maybe they're buying another indicator, buying another system that promises riches. But you're not really learning anything. There's nobody around to help you. Can anybody relate to that? Has anybody spent a whole bunch of money online and have nothing to show for it? Real education. That's why throughout this presentation I want to show you lots of proof with my background, with my knowledge, and with success from my clients. Because right now the options market is just too big to ignore. The options market is bigger than the overall equity market notionally. It is too big to ignore. Here's where I really got obsessed with this strategy. And I'm out of order here. On September 14, 2016, this article came out on Sarepta. The FDA confirms that Sarepta's nemesis, Ronald Farkas, leaves the agency. SRPT, Sarepta, that's a stock that I was a market maker. It's a stock that I follow very, very closely. Knowing that SRPT has their FDA announcement, it was like on a Friday, this article came out on a Wednesday. All of a sudden, FDA's nemesis leaves the agency. Well, to me, that's obviously a red flag. September 14th, September 15th, I shared a trade idea with my Premier members. And then 2 days later or 3 days later, the news comes out, SRPT's drugs approved, and the same thing. Here, the day before, I talked about the trade. It's really expensive. I think they're going to get approved. Once they do, the stock should trade 50, maybe 60. Okay? A binary outcome, but these are the kind of things that we're looking for. And as you can see, Stacy here, at this rate, I'm going to be stuck with you for a while, tripled his money very quickly. Mark, long 3,500 shares from 28. With that stock at 60, that's over a $100,000 winner. Torres here calls me the ambassador Quan of his trading world. I didn't even know what that meant until I looked it up. I guess it's a Jerry Maguire reference. So earlier we talked about this. I was told never to buy options. If people are saying that to you, please understand how silly that is, that you should only look at one side of the market. People are usually saying never do something because they don't know how or they're afraid to do it themselves. There's probably good edge in learning to do what others are afraid of. Here are the key differences between buying and selling options. When you buy options, you're going to lose. Whatever it is, 50 to 90, 60 to 90, you just got to make sure that your winning trades have to be a good deal more than your losing trades. Whenever you buy a debit, a call, or a put, you're long volatility. Selling is just the opposite. Whenever you sell, you're going to win more often than not, but your losers are going to be pretty great, right? A lot more than your winners. And then you're short volatility. Most people are going to teach how to sell options because when you do that, if I was teaching you how to sell options, I could sit here with an out-of-the-money option strategy, that could tell you that you can make money 99% of the time. If anybody tells you can make money 99% of the time, even if that's true, can you imagine the risks that you have that one time where you're going to lose money? You're going to pick up pennies 99 times, and you're going to lose $10 when you finally lose. It's not about percentages. It's okay if we're making money 10% of the time if we're getting paid on that risk, if we're getting paid for the odds that we're taking. Can anybody tell me what this is? This slide is one of the most important. I have 5 things listed here. Can anybody tell me what these 5 things are? Have you heard of the Black-Scholes model? The Black-Scholes model is what, like 97% of the street uses to value options. When you're valuing options, there's only 5 inputs. It's really not that complicated. The 5 inputs are in front of you. Let's talk about an Apple option. Let's talk about options in Apple. The underlying stock price, we know that. It's given to us. The option strike price that we want to trade, it's given to us too. How much time is there until expiration? Given. What's the risk-free interest rate? I don't know. Use a 1-year, use a 2-year. Given. In options, there's only one thing that's not given. There's only one subjective component. In options, it's all about volatility. If you're trading options without thinking about volatility, you are at such an incredible disadvantage. And hopefully you can see from this example, it's the only darn thing that we're trying to figure out. How big of an influence does volatility have on pricing? Let's walk you through an example. Another phony baloney stock. On the left here, let's say it's low vol stock, 30%. And on the right here is a high vol stock, 70%. Low vol, we can use Microsoft. And high vol, we can use a solar stock. Overstock.com today, OSTK, ripping higher. Low vol, 30 days to expiration. Stock's trading at 20. The 22 calls are a dime. The 24 calls are 0. So this is just saying, hey, if you want to buy 1,000 shares of stock at 22, it's going to cost you $100. If you want to buy 1,000 shares of stock at 24, you can't really do that. There's no market there. It's worthless. The market is saying that this stock has basically no chance to trade above 24. It may trade above 24, but the market is pricing it as it has no chance to get above 24. It's got a small chance to be above 22. So this stock, over 30 days, it might trade like 1950, 2050, 1980, 2020, something like that. On the right here, this is a volatile stock. This stock, the market's giving it a probability of getting above 24. And it's got a very high probability of trading over 22. It's got a high probability of trading under 18. But look at the pricing. You see how that, I'll go back, sorry. You see how the pricing, though, is very, very different between the stock that really moves versus the low vol stock? The only difference in those pricing is volatility. That's how important it is. You notice here that the upside on the high vol stock, 22 calls, 80 cents. 24 calls, 30 cents. And look at the downside. $2 lower, it's $1. $4 lower, it's 70 cents. $4 higher, 30 cents. $4 lower, 70 cents. Why? Why did I make those puts more expensive than those calls? Did I just do it for fun? Or is this how options are priced? Better yet, if we agree this is how options are priced, what's the reason? Because that's what I want you to understand. There's a reason why puts are more expensive than calls. That reason is going to benefit you. Anybody want to take a stab at it? Why did I price those puts higher than those calls? After I tell you, it's going to make a ton of sense. You'll be like, oh, wow, that makes sense. I get that. I'm going to put my market making hat on. I'm a market maker. Carl says velocity in a down move, that markets go down quicker than they go up. Right? So Carl, that's not the reason. That's also something that we've heard a lot. I'm not sure it's really true. But we do, I mean, a lot of people say that. It may be true, it may not be true. Here's the reason of why this happens. And this is called skew. S-K-E-W. No, Carl, I'm not arguing. I know the S&P's down a lot. So think about this. As a market maker, I know that the public wants to do certain kind of trades. The most popular options trades are covered call strategies and buying downside puts for protection. The market knows that. So the upside calls, as a market maker, I'm going to make those inexpensive, because when people want to do covered calls, I want the edge. I don't want to share that edge with the retail community. When people want to sell calls, I'm going to make them really inexpensive. I also know that the other most popular trade is buying puts for downside protection. As a market maker, I'm going to make my downside puts expensive because I know that that's the popular trade that people want to do. That's why upside calls are usually cheaper than downside puts, except in one industry. One industry more often than not, has more expensive calls than puts. Very, very expensive calls relative to puts. Anybody could know that one industry? This is a tough one, though. SRPT. Upside calls, 42. Downside puts, $1. Last trade, 32. $10 higher, $2. $10 lower, $1. Biotechs have an upside skew because what do people like to do in biotechs? They want to buy those upside calls, right? I walk you through this because I want you to see how everything makes sense. It's not random. We're not gambling. We don't want to just, cross our fingers and bet on Microsoft going up or Microsoft going down. It's much better probability to learn how to value options. Here's another trade that I teach. We've been using quite a bit. You could also use it in the swinging for the fences strategy. Laureate Education, LAUR. LAUR had their IPO February 8th, 2017. Okay? At that time, 35 million shares were available to trade. When there are IPOs, what usually happens is they're going to release 35 million shares, but then they're going to have restricted stock. And they have restricted stock because they want to put a floor under the IPO price. They don't want that price falling below the IPO price. It's very, very embarrassing for the underwriters. 6 months after the IPO, the lockup period is when previously restricted stock is now available to trade. For LAUR, 133 million shares that were previously restricted were now available for sale. The average daily volume in LAUR, it's only 300,000 shares. I shared a trade idea, buying the 17.5 puts. Watch what happens. IPO, 35 million shares. Think like you're an employee. Think like for a bonus, you got $100,000 worth of stock given to you at the IPO price. But you can't sell it until 6 months after because your stock's restricted. Fine. I get my stock for 12. It goes up to 14. I really want to sell it, but I can't. It goes down, now I'm super sad. It goes up, now I really want to sell it, I can't because it's restricted. Share the trade idea, this is where traders get in, lockup comes out, 133 million shares that were previously restricted are now available for sale. What's going to happen when a huge amount of supply comes in and the demand is just not there? That stock is going down. Okay? Cool trade. For swinging for the fences, guys, we're looking for two things. We want movement, we want volatility, and we want tradable options. Tradable options, hey, 15 cents at 20 cents. I could trade those options. Why there is edge in this trade? Here's why I have edge. Think of Apple. How many analysts cover Apple? 100? More? How many market makers? Over 100? Because of that, Apple is one of the most efficiently priced stocks in the market. I'm not going to trade Apple. I don't have any edge in Apple. But when it comes down to trading very volatile stocks like an SRPT, YRCW, those I can value very, very well, and I can teach you how to value, and therefore those we could have edge. YRCW might have 2 analysts, might have 5 market makers. Those are playgrounds that we want to play in. We don't want to go and trade Apple. There's no edge for us trading Apple. So what I want to do now, guys, first, are you guys following me? Is this making sense? Because really I want you to see the potential of learning how to properly do this. Because what I do is I teach, this is the foundation of trade options forever. And I didn't perfect this until I spent time as a market maker. And now clients routinely tell me, wow, I had no idea you could manage a position like that, or wow, I didn't know why those puts are so expensive relative to the calls, but that makes perfect sense. And also remember, for those out there who have been trading for a while, if you're not getting the results that you deserve, if you're not getting the results with the strategy that you're using, and you keep wanting, like, keep thinking it's going to turn, stop. Stop and reevaluate what you're doing, because change is hard. I get that. But it's life, it's money, it's too serious. And if things don't change or get worse, what then? So hear me out. I'm going to go into the offer. I'm going to tell you exactly how swinging for the fences works. I want you to understand from the beginning, no games, no false promises, no BS, just real information. And I structured this so I'm always by your side. Here's Todd. I just interviewed Todd for my 3rd podcast. Todd says there's unmistakable edge learning how to trade this way. He's up 200% for this year. In the podcast, he tells me the coolest thing I've heard in a while. He's managing mom's money. Mom's up 160%. His big trade was lumber liquidators, buying small options, getting a massive return once lumber liquidators revalue itself in the market. The truth about trading, it's not that it's complicated. When I would hire traders, I'm not concerned whether they can learn the material. My concern is, do they have the temperament to be good? Are they stubborn? Can they admit fault? Are they coachable? Imagine if you're the next testimonial that needs $1,300 more to double their account in a month on an $8,000 account. What would that mean for you? So swinging for the fences covers everything you need to find, trade, and manage your position. It's all about finding inexpensive options. Then we set it and forget it. There's no reason to stare at the market all day. To add a little credibility, anybody heard of this guy? Jim Cramer? Jim Cramer reached out to me after seeing my content. You could see the emails he sent to somebody who we have a mutual friendship with. Wow, this guy's amazing. We're reviewing your guy. You think he's a star. I just had Cramer on my podcast last week. It was my 4th podcast. It was awesome. If you guys go to activedaytrader.com, you can look. It's under podcast. Really, really cool, supportive interview. So when I talk with clients, their main concern is accountability. The way Swinging for the Fences works is you get a live options class at the end of every month. This class, it's a 60-minute options class. I gave you a little kind of glimpse of the kind of material that we cover. Anyone who's part of this program, you're invited to a live options class every single month forever. After 12 months, 12 classes, 24 months, 24 classes. Okay? I feel like I could teach options as well or better than anyone else. That's why I want you to know, if you're learning with me, there's no rush. Take your time. I'm not going anywhere. Every month, you're invited to a live options training. What's the value of this? I don't know. Normally, classes would sell for $497. You guys would be getting an unlimited invitation to come to every class. Who's this for? Beginners. This is exactly how I teach options. Those who have been trading for a while, well, I'm sure you've been on here today, learn some good little tidbits. Everything you learn is going to add to your bottom line, because most importantly, it's going to protect you. Knowing that, wow, I didn't realize I could sell stock. What a huge advantage. The underlying options don't always have the best liquidity. Knowing that I could sell stock, that's really cool. What's that worth to you over a year period or 3-year period? For experienced option traders, the biggest thing that I find, are you coachable? There are many out there that are just stubborn, who want to tell me everything they know, but yet haven't had the results. Come in, be humble, be open to education. The benefits to buying inexpensive options, hey, you always know your risk. You're never risking more than you know. You're not just shorting naked options. For those who can't stare at the market all day, like most of my clientele, set it and forget it. It's super straightforward. Protection. How is it going to protect you? Well, when you have these days when the VIX is up 20%, like today, or up 15%, when you're long puts, if you're long straddles, you're long volatility, it's going to be hedging your overall portfolio. That's a big advantage of that. Here's Paul. Paul sent me a great video. Paul's 2 main points were, my account went from 6,000 to 11,000. But even better, he said, he's having lunch with his wife. He's going out and playing golf with his friends because he doesn't feel the need to stare at his position all day. So let's get into the bonuses. Swinging for the Fences also includes a 2-hour on-demand video. Start watching that immediately. Okay? So you'll get that immediately, and then you'll also get the classes. Actually, we're getting to the end of the month. Our class will be any day now. So you get the class, you get the Swinging for the Fence 2 hours master class, and then the unlimited education. What we cover, you want to find the right trades, put the orders in the market, learn to manage those trades. We're always putting limit orders in the market. How I teach you to scan is with a completely free scanner. We use FinViz, F-I-N-V-I-Z, completely free scanner to find the trades. It's simple, it's straightforward, but most importantly, it's a fresh perspective. These are the comments I always get. Wow, thanks for teaching me how to scalp gamma. It's amazing how you can manage your positions with it. By the way, I subscribe to a lot of education. I had no idea that you can manage your options position with stock. That baffles me. How can someone teach options without teaching that options and stock, it's the same thing. It's just a derivative of one another. Because so many were unfamiliar with the position management portion, I'm also going to add an extra bonus, a 45-minute workshop that teaches you the 3 ways to manage your position. So if I put it all together, you'll get all those classes once a month forever. 2 hours Swinging for the Fences masterclass. Start watching that immediately. 60 minutes, 3 ways to manage your options position. I wanted some feedback on the Swinging for the Fences course. I got 32 people to respond. What's your favorite aspect of swing? Gamma scalping, lifetime, confidence, big money potential, access to Jonathan. My email is support@activedaytrader. I'm a quick reply. Continued monthly classes, clarity. This is weird. I want to repeat that. Another way to look at the market, Jonathan's honesty and passion. If you'll go through, learn to fish on my own. The great thing about this, guys, it's 100%. Every single comment is positive about the experience that they get going through my flagship program. Here's something that's a bit difficult for me to talk about. I love working with clients, and I receive some unbelievably sweet emails. The ones that make me most uncomfortable is when someone says, you're so smart, or wow, you're a genius. I'm no genius. I'm not the smartest person in this room. I guarantee that. But I do offer an expertise in a very specific thing, and that's options valuation. When it comes to options valuation, I am a specialist. So to go over the entire offer, you get the 3 hours right away, and you get the live classes for as long as you want. What I have for you today is one of those special opportunities. Really not sure how else to say it. You might be out there thinking, what's the catch? There's one catch. My best clients take action. Quick action gets quick results. So for the price that I'm going to show on the following page, it's good for a limited time. So value this opportunity right now. What's it worth to you to have some place every single month to go and get live options training? Not a sales presentation, live options training. What's that worth? Unlimited classes from a professional market maker. Okay? No nonsense, no BS. For anyone who is willing to move forward, it's not $497, it's $297. After 2 years, you'll have 24 hours of live class recording and the 3 hours. It's a one-time investment. You never have to pay again. $297 gets you in. It's activedaytrader.com/top shelf. If we break down the classes, you can see the longer you're coming, you're going to end up paying for options education for, what, $15 per class? If we break it all down. But it's $297, one-time payment. Again, you never have to pay again. activedaytrader.com/top shelf. It was kind of interesting because before I started my presentation, talking with Jason, we had something in common, that we both feel that we could change the education that's presented across the internet. I feel like there's very, very poor education. Jason has the background as we were talking, so they obviously have it at top shelf, but I feel like I do as well. And so that's why I want you guys to realize that I'm not going anywhere. Once a month, live classes, come and join us. Carl is asking, what account size? Good question. So this is all about learning how to trade options. So if you're trading options, what we're going to cover is for anybody risking money in the options market. The great thing about buying little options, again, you can buy one 30-cent option, it's $30. You can never risk more. Okay? So if you have a small account trading options, this is really the only possible strategy that you could do, right? You can't really sell options with a small account because of the unlimited risk. What I always recommend, guys, and what I do with my coaching clients, and I'll only take on coaching clients who agree to this, is they have to paper trade for 2 months. So I'm a big believer in practice, practice, practice. Make your mistakes with phony baloney money until you build up your confidence, because what ends up happening is if you have a $50,000 account, if you trade while you're learning, you're going to learn and be really confident, but that account's going to be at 40 grand, and you're going to spend the rest of the time trying to get that account back up. That's why I would think paper trade until you get super comfortable. Prove to yourself you can make $500 a week on paper, and then once you can do that, then start risking in real money. There's no rush. In trading, the tortoise beats the hare every single time. Okay? That's what I got for you guys. Any additional questions, you can always just email me directly. That's my email, Jonathan at Active Day Trader. Happy to answer any of your questions. Jason, thanks a lot for having me. I really appreciate it.
Jonathan, that was awesome. Thank you. And for those of you that are interested in the offer that Jonathan's made here, we watch a lot of offers come through and very, very, very reasonable. So we'll be sure to include this in the follow-up note along with the recording. And Jonathan, I'll also have to make sure that we include that link there so folks can get their hands on that as well. But we're seeing folks, just a couple of quick closing. Of course, Carl, thank you. Thank you for joining. Jason, or excuse me, Jonathan, I'm Jason. Jonathan, any closing comments before we take off?
No, I mean, Jason, first it was nice meeting you. I really enjoyed our conversation before this, and I think that the reason why we're doing this overlaps a lot. I think we have a lot of the same reasons. So thank you very much for having me. It's very important to always offer something that is a good value, and that's why I wanted to do the reoccurring classes. What I'll also add, guys, is there is a 30-day, no questions asked, money back guarantee. If you go through this program and you don't like the sound of my voice, just send an email, ask for return. It's no problem at all. This only works for me, if it works for you. So I want to be very clear about that as well.
Cool, cool. Well, I'm sure folks are looking to get a sandwich if they haven't yet already had their lunch, or they're just hitting the lunch hour, depending where you're at in the world, or maybe you're at the end of the day if you're in Europe. Thank you very much for joining us. Jonathan, thank you again. We'll send the recording out, and by all means, keep an eye out for the next series of top shelf events, and you can always check those out on the site, but also just keep an eye on your email. So why don't we go ahead and leave it at that. Jonathan, I'll circle back with you in just a second, and we'll let folks get on with their day, okay?
Fantastic. Thanks, Jason. Thanks for having me.
Of course. Thank you. Talk to you soon.